Every swing trading video on YouTube will teach you the exact same thing, whether it's moving averages, break of structure, trend lines, and then you wonder why you just keep getting stopped out and none of your swing trades actually stick. Well, the truth is price is purely cyclical. It accumulates, manipulates, and then distributes. So your job as a swing trader is to align timeframes so that you can execute on the correct phase of price. Once you get good at this, it's so straightforward and you can do it in less than 15 minutes a day. I personally swing trade over 30 different Forex pairs and I only take high probability setups when they appear. So I'm going to teach you exactly how to do that, starting with this 3.25 hour short played out perfectly on EURCHF. So let's get into it. So the first thing we want to do is align time frames. So we're looking at the 12-hour time frame, and we're going to use this today as our execution time frame. What that means is we're going to execute our trades on the 12-hour time frame, but we are doing that in alignment with higher time frame candle behavior. So this is the weekly candle, the 2-week candle, the monthly candle. So for this, we're going to start with the monthly time frame. So what I'm doing is overlaying the monthly on top of my 12-hour price action. So you see, for the entire range of November, while we're looking at the 12-hour price action, this just prints a monthly candle. So what happened in this specific monthly candle? Well, price aggressively broke to the low. Why did it do that? Well, the sole intention of price was to liquidate the previous monthly candle. So it's not about trend lines, it's not about break of structure, support and resistance. It is purely about higher time frame liquidity. So what price does is it aggressively targets the low of the previous candle. What it then does is on the 12-hour time frame shift structure. So we see price aggressively trades in, aggressively trades out. And importantly, what happens next is the monthly candle closes, but it closes inside the previous monthly candle's range. So in this specific month, this was the high, this was the low. Price broke below, closed inside. So this is classic accumulation, manipulation. Why is it manipulation? Because we manipulated lower and then closed inside of the previous candle range. The reason that price did this was to target any liquidity that sat at the previous month's low. It also broke below aggressively to attract new shorts into the market, which then got bought against. But when we closed this candle, we then set a higher time frame target in the market for price, which is where? The high of the accumulation candle. Because what price does is first we accumulate, let's just talk about the monthly time frame, then we manipulate, and then price in the new candle, this new monthly candle, distributes to where? The high of the accumulation candle. That is higher time frame AMD. Accumulation, manipulation, distribution. Now, once you see this, you will not be able to unsee it. What happens next? Price manipulates. So on the monthly time frame now, let's forget about the 12-hour for a second. Price is breaking out, raiding the external range liquidity at these highs, then closes inside the previous month's range. So where is the next target for price? It is the low of the accumulation candle. That's exactly where price goes. So we have accumulation, manipulation, distribution. Accumulation, manipulation, distribution. These are the phases of price. This is all you need to know to become a profitable swing trader. Now, what we can do to refine our understanding of the market is overlay intermediate timeframes. So we can go down to the weekly, the 2-day, but for now, I'm just going to show you the 2-week time frame. So now, if I take away the monthly and I look at the 2-week, what is happening on this intermediate time frame? Well, you can see here, we have the exact same thing happening. We have price breaking out above a previous 2-week candle range. So this is a 2-week candle range that makes up and is nested within the monthly time frame. Price manipulates above the previous 2-week time frame, candle range, closing inside. So where is the intermediate target for price? It's the low here, which I'll just mark again. So we can trade that short because we have accumulation, manipulation, now distribution. Then what happens? Price manipulates below a previous 2-week range. So again, accumulation, manipulation, the short-term target for price is the high of where? The accumulation candle on the 2-week time frame, which it then rides through. But because the monthly candle is now in its distribution phase, it's not going to manipulate this candle because we have a higher time frame target for price. So price then just rides into the previous monthly accumulation candle target. And just what happens again? It is cyclical. Once you see it, you cannot unsee it. Price then raids the previous 2-week candle. Accumulation, manipulation, where do we distribute to? The low of the 2-week candle. So there again, we get accumulation, manipulation, distribution. And again, accumulation, manipulation, which I can mark in green. We're manipulating, candle closes. Now where are we going to distribute to? The previous candle's low. But again, we now have the monthly candle closing. So we have a higher time frame target for price, which is all the way down here. So how can you now trade this? Knowing that the market moves in accumulation, manipulation, distribution. Well, as soon as we get this candle closing, we can then look for the internal range liquidity. So we have here an order block. Why is this an order block? Well, this is the last buy to sell. This is the price leg. We then have what opens there as a 12-hour fair value gap. So this is an inefficiency in price between candle 1 and candle 3. Candle 1, candle 3. Inefficiency. There is a gap between the wicks of these two candles. What this is essentially a magnet for price on the lower time frames. And I could go into it, but we're essentially then looking at even lower time frame, accumulation, manipulation, distribution. But for now, we can just swing trade this, and the 12-hour time frame gives us enough to get involved. So if we're trading, we simply set our order at the fair value gap. We cover the swing point, which is the high of the last buy to sell, and we sit and wait for price to mechanically target the higher time frame levels in the market, 3+ our trade to the lows. And I could have plotted trades anywhere in these 3 phases of price, A, M, D. This is how to profitably swing trade. Understanding what phase of price we're in and aligning your execution time frame to take advantage is how you become a profitable trader. Let's look at another example on USDCAD. So again, blind price chart. This is the 12-hour price chart. So first and foremost, monthly candle. This monthly candle closes below its previous low. So we have no accumulation, manipulation, distribution. We just have a bearish candle. So when we're seeing this pullback, we are at minimum expecting continuations, lower prices, because we haven't seen any manipulation to target reversals. So price is in an uptrend. Let's overlay our intermediate time frame. We have the 2-weekly. Okay, there's nothing there. What about the weekly time frame? This is where things get interesting. So we have accumulation on the weekly time frame. Price then raids the external range liquidity at the high of this manipulation candle right here. In closing this weekly candle, we expose the low of the weekly candle as the higher time frame target for price. So if I just take away the monthly for a second, accumulation, manipulation, close inside, we're going to distribute to the low. what do we see? 12-hour structure emerging. And we get a very subtle sting into, again, the fair value gap. So just to mark this, we have the last buy to sell. This is our order block. We also have a bearish fair value gap, which sits between candle 1 and candle 3. So that's our entry. We're entering at the fair value gap. Where are we targeting? Well, first and foremost, the lows. So it's a 1.92R trade covering this breaker block. We can even make this more, the stop loss tighter, 2R trade to the lows. And that's great. But if I bring back the monthly candle, we're distributing lower. We can see that this continuation target is very high probability. So we can hold for that target. That trade then turns into a 3.72R trade. And what happens? Price tags the fair value gap and then just dumps because there are higher time frame targets in place. Price is mechanically moving in an AMD cycle. There's been no manipulation, and so we're just expecting lower prices. This is how to approach the markets. This is how to swing trade. Like I said, I've spent years doing everything wrong, and now this is all I focus on, and I've turned into a very profitable trader. You can also, using the 12-hour time frame, simply analyze price when the 12-hour candle closes, which is only 2 times a day, which means you can cycle through dozens of Forex pairs to find the highest probability setups. Once you do this, you set your limit order and you walk away. And systematically, you check the market in line with a busy lifestyle, a full-time job, kids, whatever it might be. Now, where this gets even more interesting is I have a 30-video, 3-part series on my YouTube channel for free, which gives you absolutely everything you need to trade this system every single day. And there's so much more coming. So if you enjoyed this, please subscribe to the channel and I'll see you on the next one.